Think about the last time you bought a concert or festival ticket on your phone. You picked a date, paid online, got a QR code, and hoped the gate scanner worked when you arrived. Ticketplus lives inside that moment, between the person buying the ticket and the organizer trying to run the whole event without chaos. Ticketplus Ltd is a Santiago-based company built around live events across Latin America. According to reporting, Ticketplus has shown up around big Chilean public celebrations, the kind where thousands of people need tickets, payments, entry checks, and crowd flow to work. Here on the Cursor Stocks, the question is simple: what would have to be true for this IPO to make sense? The company was founded in 2014 and is led by CEO Qianfu Chen. That matters because ticketing is a trust business. If a fan can't get in, or an organizer can't see what's happening, everyone remembers. Ticketplus isn't selling glamour. It's selling the quiet system behind the gate. Here's what it actually does. Ticketplus gives event organizers one platform for discovery, primary ticket sales, access control, payments, analytics, and post-event insights. That means it doesn't just sell the ticket. It helps the organizer know who bought, who arrived, how sales are moving, and what happened after the lights came down. The problem is bigger than a checkout page. A festival organizer has to sell tickets, avoid fraud, scan people in fast, handle payments, and still learn which marketing worked. If any one part breaks, the fan feels it at the gate. Ticketplus is trying to make that whole path feel boring, which in ticketing is a compliment. The money engine is pretty easy to follow. Promoters, venues, sports organizations, and ticketing companies use the platform to run events and collect payments. Ticketplus then makes money from serving that event flow, so the business grows when more organizers trust it, more events run through it, and more ticket activity moves online. Now comes the IPO, the moment a private company starts selling pieces of itself on the stock market. Ticketplus is set to list on July 15, 2026 on AMEX, using the ticker TP, the short stock market nickname people use to find it. The offer is still pending, so the final price isn't locked yet. The price range is $13 to $15 per share, and shares are tiny ownership pieces of the company. If the deal price is around the top of that range, Ticketplus is expected to raise about $26.79 million. Companies go public to raise money, gain visibility, and sometimes give early backers a path to sell later. The headline raise is not huge by Wall Street standards, but for Ticketplus, it is meaningful. Last year, the company brought in about $29.5 million of revenue, which is the money coming in before expenses. So this IPO could bring in almost a full year of revenue in one financing event before any final valuation is set. That brings us back to the festival gate. If Ticketplus uses this money well, it can hire, improve the platform, support bigger clients, and chase more events across the region. If it doesn't, the extra cash just buys time. The IPO question isn't whether ticketing matters. It's whether this company can become the trusted layer behind enough events. The bull case starts with a very human need. People still want to gather. Concerts, sports, festivals, theater, and city celebrations all need reliable ticketing. And as more of that moves from paper and cash to phones and cards, a company that handles the messy middle can become more valuable to organizers. The second bull case is that Ticketplus sells more than one tool. A simple ticket seller can be replaced more easily. A platform that handles tickets, payments, entry scanning, and event data is harder to swap out once a venue's staff gets used to it. That stickiness is what investors will want to see after listing. The third bull point is rare for a small IPO story. Ticketplus was profitable in its latest full year. Profit is what's left after the bills are paid. That doesn't make the stock automatically attractive, but it changes the feel of the story. This isn't only a cash-burning startup promising that profits may arrive someday. That sounds encouraging, but here's the catch. Revenue is how much flows in. Profit is whether the business keeps any of it. Ticketplus kept about $2.24 million on about $29.46 million of revenue, which is a solid start, not a giant cushion. A few weak event seasons, lost clients, or platform problems could change that quickly. This is the part investors will argue about. A final stock market valuation, the price tag investors are putting on the whole business, hasn't been set yet. That honesty matters. Instead of pretending we know the full price tag, the cleaner comparison is this. The raise is close to last year's revenue, while the profit base is still small. Competition is also real. Ticketing is not an empty field. Around the world, names like Ticketmaster and Eventbrite are already familiar, and in Chile, systems like Punto Ticket and Ticket Pro show up around major events too. So Ticketplus has to win trust from organizers who may already have options. A smaller IPO can bring another risk. Trading may be jumpy. With 1.786 million shares being offered, there may not be a deep pool of stock changing hands at first. That can make the share price move sharply, even when the underlying business hasn't changed much. The ticket line may be steady, the stock line may not be. One thing new investors should watch is who benefits from the IPO money. The cleanest version is money going into the business itself to improve the platform and expand. If later filings show major insider selling or a short lockup, that changes the feel. A lockup is a waiting period when early insiders usually can't sell shares yet. After it lists, watch 3 simple signals. First, does Ticketplus keep adding serious event organizers? Second, does revenue grow without profit disappearing? Third, do big clients renew instead of leaving for a rival? Those are the things that tell you whether the platform is becoming more trusted, not just more visible. So the dream is easy to understand. Every packed festival needs a quiet system that sells the ticket, takes the payment, and opens the gate. The doubt is just as real. This is a small company in a crowded market, with a final valuation still unset. That's the balance, not a buy or sell signal. If you can follow the ticket from your phone to the scanner at the gate, you can follow this IPO story too. What it sells, who needs it, what could go right, and what could break. Follow the cursor stocks for more IPO stories before they trade. This video is for information and education only, not financial advice.